Hello everyone, welcome to the 70th episode of me learning how to trade in Forex. So in the last video we went through how to trade bearish and bullish pennants. Basically the pennant is that grey rectangle here. The price just bouncing within that rectangle and shooting out of it. We met the bearish pennant, so after a steep downtrend it forms that triangle and then keeps dropping lower. And then we also met the bullish pennant, basically the opposite of what the bearish pennant was, shooting upwards and then going to that triangle and then continue going upwards. Yeah, now we're currently doing how to trade triangle chart patterns. So let's get started. How to trade triangle chart patterns. Date is the 10th. So how to trade triangle chart patterns. A triangle chart pattern involves price moving into a tighter and tighter range as time goes by and provides a visual display of a battle between bulls and bears. So a triangle chart pattern involves price moving into a tighter and tighter range as time passes and provides a visual display of a battle between bulls and bears. Providing a visual display of a battle between bulls and bears. The triangle pattern is generally categorized as a continuation pattern. Triangle pattern is usually categorized as a continuation pattern, meaning that after the triangle pattern completes, it is assumed that price will continue in the trend direction it was moving before the pattern appeared. Right, okay. Meaning after the pattern is completed, it's assumed the price will continue in the direction it was moving before the pattern appeared. A triangle pattern is generally considered to be forming when it includes at least 5 touches of support and resistance. 5 touches. A triangle pattern is generally considered to be forming when it includes at least 5 touches of support and resistance. So does that mean 5 support touches and then 5 resistance touches, or does that mean 5 either mixture of support and resistance? Okay, for example, 3 touches of support line, 2 for the resistance line, or vice versa. Alright, okay, so it's like a mix. 3 touches of support line, 2 of the resistance line. Just like there are 3 little pigs, there are 3 types of triangle subchart formations. Symmetrical triangle, ascending triangle, and descending triangle. 3 types of triangle patterns. Symmetrical triangle, ascending triangle, descending triangle. Symmetrical triangle. A symmetrical triangle is a chart formation where the slope of the price's highs and the slope of the price's lows converge together to a point where it looks like a triangle. So this is what the I guess the pennant that we looked at belongs to. So a symmetrical triangle is where the slope of the price's highs and the slope of the price's lows converge together to a point where it looks like a triangle. What's happening during this formation is that the market is making lower highs and higher lows. This happens as the market is making higher highs and lower highs and higher lows. It's making lower highs and higher lows. Yeah, because lower highs, so the highs are getting lower, but the lows are getting higher. So lower highs and higher lows. This means that neither the buyers nor the sellers are pushing the price far enough to make a clear trend. Meaning neither the buyers nor the sellers are pushing the price far enough to make a clear trend. If this were a battle between the buyers and sellers, then this would be a draw. This is also a type of consolidation. So consolidation meaning indecision, I'm assuming, because there's no clear trend. In the chart above, we can see that neither the buyers nor the sellers could push the price in their direction. When this happens, we get lower highs and higher lows. Wait, they said it was 5 bounces, so 1, 2, 3, 4, 1, 2, 3, 3, 4, 5, yeah, okay. As these two slopes get closer to each other, it means that a breakout is getting near. Slopes getting closer together means a breakout is soon. We don't know what direction the breakout will be, but we do know that the market will most likely break out. Eventually, one side of the market will give in. So how can we take advantage of this? Simple. We can place entry orders above the slope of the lower highs and below the slope of the higher lows of the symmetrical triangle. We can place entry orders above the slope of the lower highs, so above here, and below the slope of the higher lows of the symmetrical triangle. So place orders, place entry orders above the slope of the lower highs and below the slope of higher lows. So if you place an order above the lower highs, then you place a buy order or going long, and you'd sell if you're placing it below the higher lows or go short, right? Since we already know that a price is going to break out, we can just hitch a ride in whatever direction the market moves. Whoa, price surges up. In this example, if we placed an entry order above the slope of the lower highs, we would have been taken along for a nice ride up. If you had to place another entry order below the slope of the high lows, then you would cancel it as soon as the first order was hit. Cancel whichever the order wasn't hit. Ascending triangle. So an ascending triangle is a type of triangle chart pattern that occurs when there is a resistance level and a slope of higher lows. So just yeah, okay. Ascending triangle is where there's a resistance level and a slope of higher lows. What happens during this time is that there is a certain level that the buyers cannot seem to exceed, so that's a resistance level. However, they are gradually starting to push the price up as evidenced by the higher lows. So I'm assuming a breakout is going to make it shoot upwards, right? So this happens as the market is as there's a certain level in the market which the buyers cannot exceed. However, price is being gradually pushed up as evidenced by the higher lows. Do that. In the chart above, you can see that the buyers are starting to gain strength because they're making higher lows. Yep. They keep putting pressure on that resistance level, and as a result, a breakout is bound to happen. Now the question is, which direction will it go? Would the buyers be able to break that level, or would the resistance be too strong? Many charting books will tell you that in most cases, the buyers will win this battle and the price will break out past the resistance. However, it has been our experience that this is not always the case. Sometimes the resistance level is too strong and there is simply not enough buying power to push it through. Most of the time the price will in fact go up. The point we're trying to make is that you should not be obsessed with which direction the price goes, but you should be ready for movement either direction. In this case, we will set an entry order above the resistance line and below the slopes of the higher lows. Right, okay, so it's not guaranteed to actually go in one direction. Right, okay, so although there is a chance of a breakout happening going upwards, that is not always the case. Sometimes the resistance level is too strong and there isn't enough buying power to push it through. Most of the time the price will in fact go up. The point we're trying to make is that you should not be obsessed with which direction it goes, but you should be ready for movement in either direction. Be ready for movements in either direction, both upwards and downwards. Ready for price movement in either direction, upwards or downwards. In this case, we would set an entry order above the resistance line and below the slope of the higher low. So above this line and below this line. So place entry orders above the resistance line and below the higher lows line. Price drops by almost the same height. In this scenario, the buyers lost the battle and the price proceeded to dive. You can see that the drop was approximately the same distance as the height of the triangle formation. If we set our short order below the bottom of the triangle, we would have caught some pips off that dive. Descending triangle. A descending triangle, I'm assuming it's going to be the opposite of what the ascending triangle was, is where the ascending triangle is the exact opposite of ascending. We knew you were smart. Oh hey! In descending triangle chart patterns, there is a string of lower highs that forms the upper line. So a string of lower highs, so the highs are getting lower. The lower line is a support level in which the price cannot seem to break. Right, okay. So, is where there's a support level and a slope of lower highs. In the chart above, you can see that the price is gradually making lower highs, which tells us that the sellers are starting to gain some ground against the buyers. Sellers are starting to gain some ground against the buyers. How shall I word this? The sellers are gaining some ground against the buyers. So the prices are getting lower and lower. Because the prices are getting lower, that should mean there's more sellers than buyers, right? Because there's more supply than demand. So that means the price is going to drop. Yeah, okay. Yeah, because there's more sellers than buyers, so the sellers are starting to gain some ground. Right, okay. And now most of the time, and we do say most, the price will eventually break the support line and continue to fall. However, in some cases, the support line will be too strong and the price will bounce off it and making a strong move up. The good news is that we don't care where the price goes, we just know that it's about to go somewhere. In this case, we will place entry orders above the upper line, the lower highs, and below the support line. Whoa, price flew up. Right, okay. Be ready for price movements in either direction, both upwards and downwards. Place entry orders above the lower highs line and below the support line. In this case, the price then ended up breaking above the top of the triangle pattern. After the upside breakout, it proceeded to surge higher by around the same vertical distance as the height of the triangle. Placing an entry order above the top of the triangle and going for a target as high as the height of the formation would have yielded nice profits. Next lesson. Know the three main groups of chart patterns. Know the three main groups of chart patterns. There's a whole lot of chart patterns we just taught you right there. That's a whole lot of chart patterns we just taught you right there. We're pretty tired, so it's time for us to take off and leave it to you from here. Just playing, we ain't leaving you till you're ready. In this section we'll discuss a bit more about how to use these chart patterns to your advantage. It's not enough to just know how the tools work, you've got to learn how to use them. And with all these new weapons in your arsenal, we better get those profits fired up. Let's summarize the chart patterns we just learned and categorize them according to the signals they give. Reversal chart patterns. Reversal patterns are those chart formations that signal the ongoing trend is about to change course. So reversal chart patterns signal that the ongoing trend is about to change course. If a reversal chart pattern forms during an uptrend, it hints that the trend will reverse and the price will head down soon. Conversely, if a reversal chart pattern is seen during a downtrend, it suggests that the price will move up later on. If reversal chart pattern forms during an uptrend, it hints the trend will reverse and the price will head down soon. If reversal chart pattern forms during a downtrend, it hints the trend will reverse and the price will head up soon. In this lesson we covered 6 chart patterns that give reversal signals. Can you name all 6 of them? Double top, double bottom, head and shoulders, inverse head and shoulders, rising wedge, falling wedge. Reversal, not inversal. Reversal chart patterns example. So double top, double bottom, head and shoulders, inverse head and shoulders, rising wedge, falling wedge. So we got some example here. Very nice. To trade these chart patterns, simply place an order beyond the neckline and in the direction of the new trend. Then go for a target that's almost the same as the height of the formation. So, to trade reversal chart patterns, place an entry order beyond, basically above the neckline and in the direction of the new trend. Then go for a target that's almost the same as the height of the formation. Go for a profit target that's almost the same height as the formation. We'll get the double top, double bottom. I think this one's clearer. Place an entry order beyond the neckline. So, well, first we've got to identify. I think the trend is more important, to be honest. So, looking at this one, neckline is going to go down. So you place the entry order just below the neckline here. Place a stop loss order above it so that if it doesn't go down, it shoots up, then you just stop your losses. And place your target basically pretty much the same length as whatever that length there is. So here, the double bottom, the price is going to shoot up, so you place an entry order above the neckline, place a stop loss order below it, so in case it doesn't go up and shoots down instead, then you stop the trade from happening, so prevent your losses from getting bigger. And then you set the target the same length as pretty much whatever. Oh no, it should be, that line should be equal to that. Right, okay, so whatever that line is, you should set your profit target to be. With head and shoulders, so we got the thing, direction of the trend will be going downwards, so you set an entry order below the red neckline, place a stop order above the red neckline, and then your profit target would be pretty much the same length as whatever that line is. With the inverse one, the trend is going to go upwards, so you place an entry order above the red line and below the stop loss order below the red line, and then you set your target pretty much the same length as whatever that bit there is. With the rising wedge, so the trend is gonna come out downwards at the end of it, so you place your entry order below whatever that line is there, place a stop order above whatever the top line is, and set your profit target pretty much the same length as that length there. With the falling wedge, you know it's going to shoot upwards, so place your entry order above the top line. What do they call it actually? I forgot what the line is called, the wedge. Pennants. This is the rectangles. This is the wedge, right? Yep, wedge. I guess they called it lower highs and lower lows, which makes sense. Right, okay, so for the wedge one, this is the higher highs and higher lows, and this is lower highs and lower lows. Right, okay, so whereas I was on that one, wasn't I? So you place your entry order above the lower highs, place your stop order below the lower lows. Yeah, lower lows, and then you set target level pretty much the same distance as that. With the rising wedge, you place your stop, because the direction of the trend is going to go downwards, so you place your entry order below the higher lows, and then you place your stop order above the higher highs, and your take profit distance then would be that length over here. Okay. For instance, if you see a double bottom, so that, place a long order at the top of the formation's neckline and go for a target that's just as high as the distance from the bottoms to the neckline. Yeah. In the interest of proper risk management, don't forget to place your stops. A reasonable stop loss can be set around the middle of the chart formation. For example, you can measure the distance of the double bottoms from the neckline, divide that by 2 and use that as the size of your stop. Right, okay. So stop would then be whatever that length is divided by 2. Same for that one here, whatever that length is divided by 2, or whatever that length is divided by 2. Continuation chart patterns. Continuation chart patterns are those chart patterns that signal that the ongoing trend will resume. Continuation chart patterns signal that the ongoing trend is or will resume. Usually these are also known as consolidation patterns because they show how the buyers or sellers take a quick break before moving further in the same direction as a prior trend. Also known as consolidation patterns, since they show how the buyers or sellers are taking a quick break before moving further in the same direction of the prior trend. Trends don't usually move in a straight line higher or lower. They pause and move sideways, correct lower or higher, and then regain momentum to continue the overall trend. We've covered several continuation chart patterns, namely the wedges, rectangles, and pennants. Note that wedges can be considered either reversal or continuation patterns depending on the trend of which they form. So continuation chart pattern examples. So falling wedge, rising wedge, bullish rectangle, bearish rectangle, bullish pennant, bearish pennant. Now I've got some nice lovely images of them here. To trade these chart patterns, simply place an order above or below the formation, following the direction of the ongoing trend, of course. Then go for a target that's at least the size of the chart pattern for wedges and rectangles. Right, okay, so we spoke about wedges. So place the entries. Yep. With the rectangles, we place the entry since we know it's going to go up. So we place a buy entry order above the top, I guess, resistance line, and then place our stop order below the support line, and then place our profit target pretty much the same length as whatever that is. With a bearish rectangle, because we know it's going to go down, we place the entry order below the support line, or we place a stop order above the resistance line, and then we got the distance here is pretty much our take profit distance, so that led there. With the pennants, so we place our bullish pennant, we place our entry order above the what do they call it? Resistance line. Okay, so they call it resistance support line. Place the entry order above the resistance line, and then we place our stop order below the support line, and then set up target as pretty much the same length as that. With the bearish pennants, place our entry order below the support line, place our stop order above the resistance line, and then our set target distance is that one there. For pennants, you can aim higher and target the height of the pennant's mast. For continuation patterns, stops are usually placed above or below the actual chart formation. For continuation patterns, stops are usually placed above or below the actual chart formation. For example, when trading the bearish rectangle, place your stop a few pips above the top or resistance of the triangle. Bearish, place a stop above the top or resistance of the triangle. Yep. Bilateral chart patterns. Bilateral chart patterns are a bit more tricky because these signal that the price can move either way. So these little wedges are the triangles. Bilateral chart patterns signal that the price can move either way. What kind of signal is that? A bilateral signal. This is where the triangle formation falls in. So bilateral chart pattern example. Triangle. Formation. Remember when we discussed that price could break either to the top side or downside with triangles? Yep, we do. So copy. Whoa, that's kind of big. Here we do. Yeah. So we've got the ascending triangle, descending triangle, and symmetrical triangle. To play these chart patterns, you should consider both scenarios, upside or downside breakout, and place one order on top of the formation and another at the bottom of the formation. Trade these formations. Place entry orders both on top of the formation and at the bottom of the formation. If one order gets triggered, you can cancel the other one. Either way, you'll be part of the action. If one order is triggered, cancel the other one. Double the possibilities, double the fun. So with the rectangle one, we can see, well, we don't really know which way it's going to go, so place an entry order both above and below it. I just thought, where do we place a stop? Because there's no stop loss, is there? So we just gotta be on it, I guess, to manually cancel the other entry order as soon as possible. So yeah, don't really know which way it's gonna go, but be prepared for it to go either way. And our target distance is pretty much that distance there. Same with the descending triangle, have no idea which way it's going to go, so place entry, 2 entry orders both above and below the formation. Set our target profit level, the length of that. With the symmetrical triangle, no idea either, place our entry above and below the formation, and our stop target is that length there. The only problem is that you could catch a false break if you say your entry order is too close to the top or bottom of the formation. So be careful, don't forget to place your stops too. Yeah. Don't place the entry orders too close to the top or bottom of the formation, as it could trigger false breakouts. Don't forget to place stop loss order as well. So don't place it too close, even though that line literally like hovers right above it. So place the entry orders few pips above where the flat line is, and also a few pips, like if there is a flat line, place a few pips above it. I don't know if you should place a few pips above the like the slopey lines as well, because see, if the price goes that distance there isn't going to be as close to say as if it's that distance there. So, but still, anyway, just place a few pips above whatever line it is to avoid that false breakout, and then place your stop as soon as one of the entry orders triggered. Cancel the other entry order and then immediately place a stop loss wherever the other entry order is, I'm assuming. So for example, in this case, if the entry order if the price went that way, then change that entry order into a stop loss order, or if the price went that way, then change that entry order into a stop loss order. So I think that's how it works. I'm going to leave this episode here. Thank you guys for watching. In the next video, we're going to carry on with doing chart patterns cheat sheet. So they're going to give us like a summary of all the things we've done regarding chart patterns so far. So I will see you guys in the next video. Peace.